Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. American factory orders are rising and setting up a good second half of 2024. But first, in China, isolation by foreign investors is becoming quite stark. New net foreign investment grew a paltry $8 billion in April from March, which looks like a decade low. For a country the size of China, this is just a rounding error. In April 2023, it was only $14 billion and also considered low. In fact, the total new foreign investment in the first 4 months of 2024 was 31% lower than the same period a year earlier, which itself was weak. The international de-risking trend is biting hard now as the nation turns inward. And Bloomberg has an interesting story about the record withdrawals from Chinese bank deposits in April. One-year term deposits in China's largest banks pay a record low of just 1.45%. So there was a large $880 billion outflow in deposits from banks in April, 1.3% of all deposits, and much of it flooded into bonds and wealth management products. The policy goal is to spur national economic impetus by making these funds work harder. But China has had significant issues with wealth management products in the recent past, so this is a very risky strategy for them. There is a history of a lot of people getting hurt and very angry. In Japan, their inflation rate fell to 2.5% in April from 2.7% in March. Their core inflation dropped to 2.2% from 2.6%. While these falls were not unexpected, they are the lowest levels since January. And Singapore's industrial production recovered sharply in April after a big miss in March, but it still isn't back to year-ago levels. Across the Pacific, US durable goods orders rose by 0.7% in April from March, following a 0.8% increase in March and defying market expectations of a 0.8% drop. That makes them a very impressive 7.9% higher than in April a year ago, and augurs very well for their factory sector in coming months. It was mainly driven by strong demand for transport equipment. The US Treasury 10-year yield is now at 4.47% and up 1 basis point, and the price of gold will start today down a minor dollar at just on $2,333 an ounce. That's down $85 in a week. And oil prices are down 50 cents, just over $77.50 a barrel in the US, while the international Brent price is just under $82 a barrel. These levels were $79.50 and $83.50 a week ago, so about $1.50 less since then. And the Kiwi dollar starts today unchanged from Saturday at just over 61.2 US cents, but a quarter cent lower than a week. Against the Aussie, we're marginally firmer at 92.4 Australian cents. Against the euro, we're also firm at 56.5 euro cents. That all means our trade weight index starts today at just on 70.6, which is up 20 basis points from a week ago. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.